please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's a red start, 23 down on the Nifty, 30 down on the Sensex.
Gross margin improvement, which stood at 47%, which we believe is really healthy and kind of in the zone that we want to be in.
It's an absolutely flat day so far. There's about a 2-odd point change down.
The market, I think, has given enough hints that it wants to maybe go through one more round of mid-cap correction, Surabhi. Once again, the mid-cap index not quite closing at the lowest point.
Bulls take a breather on Dalal Street after yesterday's spectacular rally. Major indices end barely in the green after trading in a narrow band through the day.
Midcaps underperformed the blue chips thanks to minor profit booking. The index shed nearly 100 points. United Spirits fell 7% after third quarter earnings disappointed the street.
PSU banks rally in trade ahead of a government announcement on recapitalization through bonds with tenure of 10 to 15 years. All the major banks under the Reserve Bank's prompt corrective action list get capital cushion.
IT stocks are the flavor of the day. Frontline as well as mid-cap IT stocks rally, taking the index over 1% higher. TCS CEO Rajesh Gopinath tells CNBC TV 18 that the global environment is very positive.
And Reliance Jio steps up. The tariff war launches a 98 rupee plan offering free voice and unlimited data for 28 days. Bharti Airtel and Idea see cuts of over 5% in trade. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you about 8 hours of exciting market trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi, Prashant.
Thanks, Lata, for that. Over the next 30 minutes or so, we will discuss the top 5 market headlines. Our experts will answer all your stock questions. Joining us to answer your questions are Gaurang Shah, who is with Geojit Financial Services, and we also have our market expert, technical expert, Ashwini Gujral. Gentlemen, thanks very much, both of you, for being with us here on the show. But before we come to both of you, let's take a look at how the markets did in trade today. 2 days, that's Monday and Tuesday, the Nifty added 190 points, 2 days. And today it took a bit of a breather. Lata.
Yes, that it did. And it looks like it was also kind of globally dictated. We saw a bit of a pause coming in the US, or at least a mixed performance, with only the techs doing extremely well because of Netflix. Asia also, well, not exactly one of those big days. And in India, you could see the sense that bulls would take a breather. But it was averted from becoming a carnage on the mid-caps. Clearly, the markets indicated that the mid-caps, they're still not comfortable with the levels. And at one point in time, there was fairly serious selling in mid-caps. But it got countered when post-noon, we saw a lot of buying in PSU banks. And even now, if you look at the advanced declines ratio, it's over 2 stocks in the red, or nearly 2 stocks in the red for 1 in the green. So actually 65% of the market has ended lower than where it was yesterday. So it's not been a good day for mid-caps. It doesn't look like a carnage only because the PSU banks saw a lot of buying ahead of this recapitalization announcement, which came just after market closed. Besides that, of course, the rest, as we told you in the headlines, IT is a star. It has been a star for some time now. Technology stocks and Telecom got a beating. But Prashant, you tell us stock-wise.
Lots of losers, but I just identify the sectors first. So as you said, PSU banks did very well. There was IT, which saw strength, and there was pharmaceuticals as a pocket, which saw some buying. In terms of pressure points, metals, consumer stocks and private banks actually sold off pretty aggressively. So that's basically sectors which did well and did badly. I want to tackle the losers first because, the market breadth, as you pointed out, was pretty bad. So look at this. Bharti Airtel, Idea, United Spirits, some of the big losers in terms of trade. Then you had names like DHFL, Radico, Panacea Biotech, which lost. RBL was down about 4.5%. PC Jewelers, HEG, and these are some big outperformers. So what I've done is I've taken a mix of both large caps and mid caps together and just sort of sorted it through some of the highest turnover, and this is what you get. So, a bunch of names across sectors, market cap agnostic, lost heavily. Now to gainers, PSU banks, SBI, BOB, PNB, the large cap gainers. There were others as well. IDBI did very well, by the way, in trade. Mid-cap technology stocks, specifically Mastech, NIIT Tech, Hexaware. Actually, there were about 8 mid-cap IT stocks which were up anything between 5 and 6%. Now you come to stocks like Amara Raja, Indigo, which reported numbers as the markets were closing. It went up some 40-45 rupees on the back of those numbers. And you had something like an Oberoi Realty, which did very well as well. Lata.
Okay. Well, we will discuss all this and more. But before we get to the second headline of the day about mid-caps, let's invite our experts to give us their comment. Ashwini, what's your reading of the market's breather today? Have you gone home with long positions? Would you advise long positions at this juncture?
Well, good morning, good afternoon. See, you have to understand, if you're an investor, you've bought at 8,000, 500-point Nifty correction will not bother you. But if you've bought yesterday and you are leveraged, etc., then the market is clearly showing that post a vertical rally, today was indecision. Now, indecision can continue for a couple of days, and then the market makes that decisive move. Maybe it tries to, coincide with the budget, etc. But the way it's acting now, which means it is completely narrowing, only a handful of stocks are keeping the index higher while, broader markets are selling off. Those are often signs that the market is ready for an intermediate top. Now, intermediate top means that you come off 500, 600 points, the mid-caps get butchered, etc. And then, the next leg of the rally starts. So definitely one leg of this bull market seems to be coming towards its close.
Okay, well, that's an important take home. And with that, we come to the second headline.
Let's get to the second headline. The mid-caps underperformed thanks to a small bout of profit booking. But, the carnage was widespread. Stocks broadly ended lower. Stocks like United Spirits were down 7% after third quarter earnings disappointed. We spoke with the management of the company, United Spirits, and they said that the company is committed to realize mid to high teen margins going forward. Since United Spirits has sort of been the point of conversations for so many days, let's listen in to a short soundbite of the management.
We have never been more confident about the current health and the future of this business. We have overcome some of the biggest headwinds that had the potential to not just derail this company, but to derail this industry, and we are past those. And we have come out much stronger for it. We are therefore committed to investing in the future, and some of the decisions that we've taken this quarter are in line with that perspective, so as to realize our medium-term ambition of double-digit growth and mid to high-teen margins.
Okay, well, we've got people asking us questions on this and other stocks. Mid-cap carnage, 4 stocks that we showed for you, and we showed it to you with a reason. United Spirits, Delta Corp, that is DHFL, and PC Jewelers have seen some very big rallies in the past few months, and today we saw red on that. Look at the bright shade of red. Between 5 and 7% is what these stocks have fallen. So some questions on this. Twitter user Manish says he has 1,000 shares of PC Jewelers purchased at 377 rupees, wants to know if he should hold or if he should sell. Hasn't given us the time, but Gaurang, you like this stock? What would you advise him?
Well, the entire sector looks interesting, Lata, and as you have more of discretionary spend available, you are likely going to see some amount of, preferred buying into gems, jewelry, etc. That's point number 1. Point number 2, on PC Jewelers, I would not want to make any specific statements, but if I have to comment on one company which we cover in the gems and jewelry segment, that's Titan Company. And our sense is that earnings which came by has definitely thrown in positivity. And as the theme picks up, as spending picks up, I think these companies are definitely going to do better on fallback of earning visibility. But on PC Jewelers, we don't have a coverage. On Titan Company, we definitely like that.
We have another question. Twitter user Prasanna has 100 shares of Radico Khaitan purchased at 285 rupees. The price today was about 380 or so. We would like He would like the view for the short term. Ashwini, Radico.
See, again, seems to be longer term player. So I don't think there's any problem, although it's gone up sharply today because of United Spirits, etc. had some bit of a correction. So while it can correct, but I don't think the bull market is over. In fact, in all of these liquor stocks, there is still a lot of room ahead. So if you can take small corrections, I think any correction should not go below 340, 350. Then just hold on and ride further. Maybe a stop you can place around, say, 340.
Okay, well, very quickly, Ashwini, these 4 stocks that took a beating today after many days of rise, United Spirits, Delta Corp, DHFL, PC Jewelers, which is the safest, which is the riskiest?
See, nothing is safest, nothing is riskiest.
Okay.
The price is the risk.
Okay.
If you bought Delta at 170, there is no risk. If you bought Delta at 400, there's a problem. So if you've bought at good prices, then this shouldn't bother you. But if you've bought it at elevated levels, your stock is coming off and you are losing more than 10%, keep that as a benchmark, get out, and then maybe re-enter later on.
Okay, so 10% as the stop loss. Thanks for that. And we get to the third headline. It was a good day for the public sector banks. Markets sniffed that the announcement of fresh capital will be coming after market hours, and it did come after we shut shop for trading, just as we had reported on CNBC TV 18 earlier in the morning. The index, that is the PSU Bank Index, rose to close 4% higher in trade.
Another significant announcement?
Well, actually, on expected lines. It's not as if, they have denied any bank any capital. I don't think the market can take this forward as, they've given outsized capital to X bank and that will be a merger candidate and it'll acquire some bank. It is not like that. They've given enough regulatory capital for the extremely weak banks so that they don't lose the right to open an LC and things like that. Other banks, foreign banks doing business with them will not be scared into not doing business. They will not renege on paying interest on their, say, tier 2 bonds, their capital, their additional tier 1 bonds. It is that they have ensured with this capital. You can't read beyond that. The strong banks obviously are now better off. So SBI, BOB, Vijaya, Indian, all these banks are definitely going to be rewarded today, tomorrow further, because they will be seen as, strengthened, be able to take cuts. So I think this PSU Bank rally will have one more day to run, and thereafter differentiation will be on quality.
But nothing like the rally we saw when the first announcement was.
Yeah.
Stocks completely re-rated. Here are some reactions actually from the government and bankers on the capital infusion announcement.
And the second part of the exercise is that the various steps to be taken in order to ensure that the governance of the banks follows the higher standards itself.
No impact on the fiscal deficit, but it adds to our liabilities. So that we have explained.
So how much does it impact on the liability side?
Same equal amount, 80,000 crores.
So the entire and so how much of the bonds, what would the contours of the bonds, sir?
I explained to you, bonds would have different maturities from 10 years to 15 years. 1/6 of the bond would be in one bucket of 10 years, another 1/6 likewise. So we will have 6 series of bonds.
No, I think as far as we are concerned, as you know, that we are adequately capitalized at this point of time. We don't immediately need capital.
Yes.
We raise the capital from the market also during the current financial year. But as the finance minister said, that this will help us to, fund the growth actually. So hopefully, the growth should happen sometime next year. I think the government had announced in the beginning itself actually, so what would be the minimum amount that will be given to the banks who are under PCA. But they will be, I think so they have kept their commitment of, some capital being allocated for the growth purposes.
The capital will definitely get a great support. 9,000 crores will help in taking aggressive haircut. That is separate. But NCLT cases already, that cases, automatically will be getting right back a huge amount of capital because 100% provisions in big accounts. So, but this capital will help a lot,
taking haircuts.
Taking haircut and going for growth also.
Actually, my provision PCR is today around 62%.
Okay.
And the target for the year is 65%. Even without this capital, we can definitely look for provisioning. But I presume whatever is given for the growth capital, and we are very confident we will achieve.
Okay. Okay, questions on PSU banks. Shyam Prasad is calling from Hyderabad. I believe he has Oriental Bank of Commerce shares. Go ahead, Mr. Shyam Prasad. What is your question?
Sir, good afternoon, sir. I am having a OBC at the rate of 120. Since from last 2 years, I am holding this stock. What is the future prospect of this, and what is the target I can expect in the near future?
How are you in need of money? You want to sell it anytime soon?
I can wait up to another 1 year, madam.
Okay. Well, Ashwini, any thoughts in the next 1 year? Is the chart looking like it can do better for him to book at a slightly better level?
I think it's still 120.
129, I thought today.
130 today, yeah. 130 today.
Anyway, see, it's clear that the stock is not responding. Even the entire recap gains have been given back. See, it never pays to be with an underperformer. And now that technology is picking up, I think you'll be much better off trying to get into mid-cap techs than a third-rung PSU bank. So my sense is getting out would be much better, whether you wait 1 year or 6 months. I don't think too much difference will be there. So try to get into something like NIT Tech or Tata Elxsi, Sonata Software, on declines obviously, but you have to be with the sector that's really coming up.
Okay. So that's the advice for you, Mr. Shyam Prasad. If you're in the money, better to get out and get into tech stocks which are at the moment doing well. The expert is advising NIT Tech and such like.
We have another question. I mean, this is a SBI we're talking about, and the question, I don't think there's a name. He has bought 150 shares of State Bank of India, purchased at 225 rupees a share. He wants to know if he should hold or sell. I mean, the price today is 330 rupees. Gaurang, you want to take this? State Bank of India, hold or sell?
Sure, Prashant. This entire exercise is in the right direction, first of all. And we are positive on 4 names in the PSU banking side. That is State Bank of India, Bank of Baroda, Indian Bank and Union Bank of India. And if you actually look at the health of the balance sheet of these 4 banks, it's much better than compared to some of the other public sector banks. So stay invested in case if you bought it for a long term in State Bank of India.
Okay, Gaurang, thank you very much for that. We are coming back after a short break with our experts and more stock questions answered. Stay tuned.
Welcome back. You're with us here on Markets Today Talkback. Ashwini Gujral and Gaurang Shah are answering all your questions. Let's go across to the 4th headline of the day. IT stocks were the flavor of the day, and frontline as well as mid-cap IT companies rallied in trade. TCS head honcho Rajesh Gopinath, who we spoke with in Davos, told us that the global environment is very positive and that IT spends are much more dynamic today. Let's just quickly listen in to that soundbite.
IT is becoming more and more linked to business. So the kind of spending that you see is a lot more dynamic compared to more static kind of annual budgeting based fund. So that was what I was alluding to. And this whole shift to agile is something that we are very significantly embracing. And we think that we are leading the way in terms of going to what we call a 100% agile world.
Okay, we've got a question now from the IT space. Vivek is calling us from Pune and he's got a question on Mindtree. Vivek, hi, thanks for calling in. What's your question? Vivek, go on. Vivek, are you there?
Okay. I think we can't get through to Vivek. But Gaurang, Mindtree, purchased at 105, he should stay put?
Lata, we have a reduced recommendation on Mindtree to be on record. In mid-cap IT, and in fact, Lata, for the last 1 year or maybe more, this Indian IT sector was an untouchable sector, and now because of earnings turnaround, it's again come in the spotlight. We remained positive almost 1.5 to 2 years back. We are still positive. I would request a shift to, if you want to buy something in mid-cap IT, then NIT Technologies or a Science Limited would be a preferred choice, or else stick to the larger names, TCS, Infosys, HCL Tech.
Anyway, he's sitting on gains in Mindtree. He bought it at actually 575, now at 735. So sitting in a gain, and the advice is you could move to NIT or the biggies. The final headline of the day, Bharti and Idea saw cuts of over 5% as Relgeo upped the ante on the Telecom tariff war. Relgeo has launched a 98 rupee plan offering free voice and unlimited data for 28 days. Also, Idea saw no fireworks in its third quarter earnings that was announced today. The results barely met street expectations. Ronit is here with details on all this. Ronit.
So Telecom stocks were deep in the red today, the Idea as well as Bharti Airtel. And there were two reasons for this. The first reason was Jio. They effectively cut their tariffs by 33%. So what they've done is they've increased the validity of plans from 1 GB to 1.5 GB per day without any additional cost. So this is effectively a 33% cut for them. Moving on, Morgan Stanley came out with a note on Bharti Airtel saying that if Bharti Airtel were to match Jio's tariff cut, this would lead to a 2% impact on their India wireless revenue as well as a 6% impact on their India wireless EBITDA. Now moving on, Idea Cellular, they reported their set of numbers today. It was largely a number that met estimates, but nevertheless there are weak set of numbers, and the weak numbers continue for the telecom companies. If you see Idea, the revenue dipped by 13% quarter on quarter. It was largely below our estimates, as well as their margins came in much lower. One of the reasons was this because the data realizations have fallen, as well as due to heightened competition, they have been having unlimited plans which reduces their margins. Now finally, the all-important number, the average revenue per user, that came around 114 versus 132 quarter on quarter, which was largely below our estimates. And the management says that the ARPU downtrading will continue largely because of the interconnect usage charges.
Okay, in November, Bharti had reached about 565 or so. We've got a question actually on Bharti. Our viewer Mayank M from Chennai has sent us this question. He wants to put in 50,000 rupees in Bharti Airtel, and he's a long-term investor. He wants to know what is the right time to enter the market. Ashwini, what would you tell him?
See, first of all, I'm not sure, whether this is the right investment, because anywhere where, tariffs are coming off, the customer is having a great time, the investors generally don't have a great time. Now, unless this economics changes, I don't think you will get anywhere investing in telecom. If you still want to do it, I think 430, 440 is a good place. At least you'll make some money from there. But if you randomly buy and expect this to go to 800, I don't think that's quite likely. Again, the advice is the same. Get on to tech, because that's where, the fresh money is going.
Okay, we leave it at that. Ashwini and Gaurang, thank you very much for joining us. We have to wrap up on this edition of Markets Today Talk Back. Thank you very much for watching.